But, as Will Smith would say, if you and I got on a treadmill side by side, either you're getting off first or I'm going to die.
Hello, everybody. This is Jake Stenziano, host of Whitboro Props Podcast. Here with my co-host, the multifamily mentor, the coach, chef, father, six, the best-selling author, the G-Daddy, Gino Barbo. Gino, how's it going?
Mr. Stenziano, I'm still waiting for my shirt, bro. I mean, that you are popping with that car. I mean,
Dude,
really,
Florida
Josh?
Teal, bro.
You're killing me, Josh. Where's mine? I want my shirt, man.
No love for the Florida guys. So, hey, we have a very special guest today. Today's guest is Ari Rastegar, founder and CEO of Rastegar Property Company. Ari founded his company, real estate investment firm, in 2006 while still in law school. Since then, he has built a portfolio network designed to reduce risk, provide strong quarterly cash flows with an emphasis on asset classes such as self-storage, multifamily, office, retail, and industrial. That's going to be good talking about this to see, who's performing during the corona right now. We got some diversity here, Gino. So without further ado, Ari, welcome to the show.
Hey, thanks for having me.
So, all right, law school, getting into real estate entrepreneur. Did you finish law school? Did you ever practice law, or did you just say, screw this, I'm going to just make some money?
So my father, had said something to me that resonated pretty powerfully. I actually never wanted to go to law school. My father was an attorney, went to law school a little bit later, and I said, look, I want to go into business right after, undergrad. I was an English major, and his exact words were, after you become an attorney, you can be an exotic dancer for all I care. So, he didn't say that I couldn't start a business while I was in law school. So yes, I did finish law school, took the bar. I'm still, I guess, technically a licensed attorney. I practiced for all of about 15, 20 minutes, and then was kind of exclusively on my way to building the business.
Hey, Ari, I haven't really heard too many strippers with the last name Rastegar. So, I mean, it's a great last name. Maybe it's a good stripper name. I don't know. But let me ask you, what did you learn in law school? Is there anything that you learned that you're able to pull out and utilize it?
Yeah, well, look, real estate is a contract business, right? So, all real estate ultimately is contracts. And, Mark Twain has a great quote. He said, when I was 18 years old, I didn't realize how little my father knew about the world. But by the time I turned 25, I couldn't realize how much he learned in 7 years, right?
Yes.
So that was kind of the story of my life, to where I was there, learning the law, not knowing how it was going to be applicable, but yes, in hindsight, it's really helped. Not that I would have made some great lawyer, but since we are in the contract business, being able to speak with our attorneys, and we have some of the best attorneys in the world, and understand the jargon, understand the meanings of some of the phraseology within these agreements, has proved to be absolutely invaluable. I can point to 10 or 15 different instances where we were able to read the document, see something that maybe counsel missed, or be able to build in a nuance that protected our clients. And so yes, it took me a while to realize the value of it, but it was absolutely priceless in hindsight.
Two more questions about a lawyer. Number one, did you pay for school? Did you pay for school, or did your dad pay for school?
So I paid for school with scholarships. I actually I graduated Texas A&M, and in December, and law school started in August, and so I didn't have enough money to go to school. So I sold cars during that 9 months to save up money, and got a scholarship, and then ended up using all my scholarship money and all the money I'd saved up to start my real estate investment business, and kind of put it all on the line, and used student loans to put myself through school. And I worked all through undergrad as well. Worked a full-time job while going full-time at school. My father did help me a bunch during undergrad, but I worked a full-time job ever since I was 16 years old.
Dad, you got to hook me up. If you want me to become a lawyer, Dad, you got to at least pay for it. You know what I'm saying? The opportunity cost, Dad. I'm going through school. I got to pay for it, and you're letting me do it, and I have no decision here, right?
He was a smart guy. He was a smart guy. He always would talk about how, if it's free, you don't value it. And there's something to be said about, when you put your ass on the line. I don't know if I'm allowed to say ass, but you put your ass on the line, and it kind of pulls you to something greater than if someone is trying to push you there. And I think he understood that. And Ended up voting really well. And it was a really, really happy day many years later when I paid off those student loans.
Hey, Ari, you can say ass in the show because our wives think we're two asses, so it's okay. So it's very appropriate for the show.
Oh,
So
I have a wife too. Trust me, I know exactly how it goes. She actually works in the company, and my wife's older sister is our chief operating officer. So I get it from all angles. Trust me.
Oh, that's tough, man.
oh man. My last lawyer question: what did you not like about being a lawyer? I mean, there must be a litany of reasons.
No, absolutely. Well, lawyers, look, as a professional investor, you walk a fine line, between how you manage risk, how you take calculated risk. Lawyers are trained to see how the world is going to fall apart. I mean, so everything you talk to a lawyer about is, I don't want to use the word pessimism, but it's from a place of, if this, and this goes wrong, let's prepare for all those things. And so you kind of have the devil and the angel on one shoulder as an investor, where you're trying to think of, how can I make this thing great and have an optimistic view of what we can produce and create in the future, but then balancing that against, that doom and gloom mentality that lawyers have. And if you can balance them, it's an unbelievable synergy to balance risk, understand from an honest perspective what the risks could possibly be and mitigate them. But lawyers think too much on what could go wrong and aren't risk takers. And in order to be a successful entrepreneur, you have to take risk. And again, you take calculated risk, and we're always looking for risk adjusted returns, and how can we make, the most by taking the least risk. And so it's a balancing act there, but lawyers are definitely trained, to think of all the doom and gloom. So what I like to say is I'm a recovering attorney.
I like that. Let me ask you, just think back when you're starting out, did the lawyer mentality ever get into the way of you, like looking at a deal going, man, I should have done that deal? Because Jake and I have gone through the cycle where we're looking at deals and they just didn't make sense. And now we look back, we're like, damn, we should have bought that thing at a 6 cap.
Look, there's many of those. So I was in New York City on Wall Street for many years, and I actually looked at Uber and looked at Twitter and looked at some of these original investments that crossed my desk through some of the, people that I worked for. And I was very fortunate to work for some of the greatest names in our business, multi-hundred millionaire billionaires, all the way up to things. So, I saw a lot of those deals vicariously kind of through them, but I decided very early on that I wasn't going to have a rear view mirror. I am forward looking in my approach. I don't look back. And, it's hard to connect those dots, because the failures that I've had in my life, or the missteps in my life, when I look back at them with honest eyes, I see that it was an exaggerated example is, oh, you're in traffic and, you're late to that meeting, and you're like, oh shit, I, missed the meeting because I was late in traffic. But you have to look at it from a place of faith, of knowing that maybe you would have got into an accident, or maybe you would have rushed, or if I was successful in one of my entertainment companies early, as my wife said, you would have been, a multimillionaire party promoter. And the failure of that business is where I met the initial investors that helped me launch the private equity business to another level. So it was the failure of one thing that led into the success of the other. So I don't have a rear view mirror. There's an old Garth Brooks song. I'm a Texas boy that the premise is, thank God for unanswered prayers. And, I live by that creed.
So when you start in 2006, how do you start the real estate company? Do you jump right into multifamily, or you single family?
Oh God, no. It was I borrowed $3,000 from the father of one of my college buddies, used some scholarship money. And as I was driving back and forth to law school, and remember, this is, 2005, 6, 7, when the subprime markets were going Donkey Kong, that literally anything that you threw up was selling and financing at 110% finance, just crazy stuff. And I partnered with a local developer to build a single family home near this little lake north of San Antonio called Canyon Lake. And my pitch to him was something that stayed true to the DNA of Rastegar all these years later. And by the way, that company ended up working out. I went to Wall Street, worked for a bunch of people, started Rastegar, Rastegar Property Company, or what became Rastegar Property Company about 6 years ago. So there was a lot of failures along that way. But basically said, look, I'll buy the land. It was about $4,000. I'll pay the mortgage. You build it at cost, and we'll split the profits 50-50. And we did several projects that way. And for a kid that was, flipping burgers at Johnny Rockets, a few years before, delivering pizzas, through college. We made a lot of money. And then when the market turned, we lost absolutely everything other than our investors' capital. We're able to return all the capital to the investors, all the money to the bank. I thought I was going to have a 6, potentially 7-figure exit as a 23-year-old kid. Ended up having nothing and starting over, and moved to New York City, where I worked under one of my mentors, who's still one of my best friends, and his son now works for me full time. So we're paying it forward through that kind of old school apprenticeship type mentality.
So Ari, this is I'm a person speaking from a lot of experience of failing. My partner there has never failed. He's just
Dude, don't put that evil on me.
He's just latched onto my failures. So I mean, like everything.
On,
He's living through. He's a rock star. I mean, once he started out in multifamily, it was all gone. I've gone through a lot of those failures in business, started and stopped. Give me a thread. Like what, when you look back and you call them failures, and they're not. They're just problems that ultimately turn into opportunities. Where did you see you did wrong in those previous businesses?
Yeah, it was, it was a lot of things, right? So now we own as you all know, a multi 9-figure business, headed to $1 billion this year. And, and it's funny looking back on that, because now we're one of the largest multifamily owners in Austin, which I would argue is the hottest real estate market in the US. I was very lucky to be born here and have those deep relationships. So obviously we built an enormous business where our investors are public pension funds, family offices, and high net worth individuals. But I'll tell you that the failures came from a personal place. I'm a big Tony Robbins guy, and I've had, my own life coach, Miss Lauren Zander, who I believe to be the greatest life coach in the world. She coaches the likes of, the Hugh Jackmans and these, massive people. I've been with her for 10 years, and it all had to do with me. And I started to learn that it was my own lack of personal development that was feeding into that failure. So, wanting to be right, myself, and letting my ego drive some of those decisions of something maybe I found, and wanting to be right versus looking for the right answer. And by I guess through that maturity, I guess, for lack of a better word, stress testing things better, taking advice from believable people, being okay with being contradicted, being okay with, hearing other opinions and coming to the right answer. And so it was a philosophical, personal development place where my ego had to be checked. And I had to find that place where I've always been a huge advocate as an attorney for my clients or investors, or however you want to call it, where, I'm a lion protecting them, first and foremost. But it was a psychological approach of getting out of my own way, and checking my ego and letting the math and letting the data and letting those things dictate those decisions. And when we started to put those protocols and those systems in place, the success became exponential and geometric growth, because the missteps were just so much less. I'm okay with failure. Like I take the risk. I'm okay to fail. Everybody in my company always jokes that Ari fails really quickly, like really, really quickly. And I was a wrestler, so I'm used to getting kicked in the teeth, hitting the mat, jumping back up. I'm not the smartest guy by any stretch of the imagination, but as Will Smith would say, if you and I got on a treadmill side by side, either you're getting off first or I'm going to die.
I like that. Let's go back to your first deal in multifamily. What did that look like? And was it in Austin?
Yeah, it was the first. Well, so I went through a risk mitigation strategy. And so we've been in 38 cities, 12 states, 7 asset classes. And, I worked under some huge names, as I said, running the deals in all different asset classes before. And then when I started my own shop, I wanted to do co-investment. I went to some of the best sponsors that I knew, raised the capital through, to different vehicles or through SPVs or funds, and then just placed co-investment capital alongside other GPs and did LP capital, co-GP capital, did some debt origination, and just really learned from the masters and watched how they did things, learned their quarterly reports, spent time with the properties, but really as a passive investor, not really having to control. And then slowly and surely built up our own, property management business, our own construction business. And I own 100% of our company at the GP level. We have no outside capital at the corporate level, which is, pretty unique for a company of our size. But we did that, piecemeal. So the first one that I did kind of solely on my own, that we managed, that we did, was here in Austin. It was a 23 unit property, and obviously Austin cap rates are low, expensive per door. So it's about a $4 million project. But the base knowledge that we acquired over the years from learning from all these great multifamily operators allowed us to stave away a lot of mistakes. We of course still made mistakes along the way, but we have so much tailwind here in Austin that we were able to wipe out what some of those mistakes might have been a little bit more dismal in a different market. But the Austin market on a macro level helped us on those, and they were very, very successful. We moved to a Fannie Mae takeout within about 14 months of acquisition post renovation. Popped rents somewhere around 40% on the first turn, and turned out to be extremely successful.
What are the markets you currently invested in?
Right now, we're in Phoenix, Arizona, Dallas, Texas, and the Austin MSA. I own about 260 acres of undeveloped land in the Austin MSA, which includes Kyle, Texas, which is a little bit south of Austin, which I argue is not only the fastest but most robust, tertiary market in the United States of America. Amazon just signed one of the largest leases, industrial leases ever for a market of that size. It's about 15 miles south of Austin. We own 50 acres near the airport in the Opportunity Zone, right up the block from Elon Musk's new Gigafactory, which will be the largest in the world. And then a bunch of other parcels. We have a seminal work in Dallas, Texas on McKinney Avenue, which is the Park Avenue of Dallas, that we're building a 26-story high-rise. When it's all said and done, will be a $250 million project in and of itself. So in terms of development, in the Kyle project, we own 200 acres. We're building a 700 home residential use, and all our strategy is to get the entitlements, buy the land, do the assemblages. We actually had a huge press release come out today that we're completing our land assemblage on South Congress, which is one of the main thoroughfares of Austin, to build a mixed-use multifamily project. But it's all about mitigating risk. So we're partnering with huge institutions. We put up the money, we do the assemblage, we'll go through the zoning, we'll come up with the master plan, and then we'll partner with a big institution and mitigate kind of that development execution risk, which has always been our game. People come to us not to hit these massive returns. They come to us for safety and security. I'm not the guy that's chasing, these big IRRs. I'm the guy that wants good current yield, a safe risk-adjusted return, and, don't lose money.
So Ari, what is Texas getting that the rest of the United States is not getting? Because they're probably creating more jobs in that state than all the other 49 put together, with maybe the exception of maybe Florida and maybe Arizona and a couple other.
It's not even close. Okay. So, I spent a lot of time thinking about that, and, Texas, the things that people miss about Texas, one of the main drivers is no state income taxes. Okay. And so that's one piece of it. Texas also geographically is the center of the United States. So from when you're a large employer and you have these business trips, you're in LA in 3 hours, you're in Chicago an hour and a half, you're in New York in 3 hours, you're in Miami. So geographically, and American Airlines understood this very early by putting their headquarters in Dallas, right? And so there's a geographical piece there that's important. You have fair weather climate, which everybody is chasing within that Sun Belt area. You have a strong mix of both kind of right and left politics. The joke in Austin is that Austin's not in Texas, right?
It
so you
really
have this you really have this kind of liberal core in the urban center. Then you have this very strong, kind of right, political view on the perimeter and the suburbs, which creates this beautiful dialogue. And, Austin has one of the one of the greatest tree canopy, kind of tree canopy mandates in the United States. And effectively what that is how we protect our trees, and how we're, you can't cut down, a heritage oak tree that has circumference larger than, so it keeps it beautiful. So if you look out, my window right now, I mean, you literally see downtown and you see this whole massive forest that keeps the city so beautiful. And we actually have more parks kind of per capita of any city in the United States. And so when you factor in, lower cost of living, more employment, no state income taxes, the fair weather climate, that confluence creates something very special. And Texas, if it was a country on a GDP basis, would be the 10th largest country in the world. And so to have a fully diversified economy within healthcare, financial services, energy, government, technology, music, and have your own natural resource that can support. I mean, Texas is the only state in the United States that, if it was a country, could be fully sustainable because of the natural resources and the GDP. So the
Well, how big is the military too, though? There's a decent sized military in Texas, right?
Huge military, and that's the and that's the other part of it. It's also very gun friendly, in that regard. And that can be a pretty polarizing thing to say, but from the Second Amendment
man, we're just having fun with it. I think the like joking around, I would say that Texas probably ranks in the top civilian militaries in the world as well.
I was going to say there's probably more guns in Texas than armies. Yeah, and that was a joke during World War II. That's why the Japanese never invaded us, because there was like 500,000 people in Minnesota that had guns. I know probably half a million to more, and that's why they never invaded us, which is crazy.
Guns are at an all-time high right now. So if you kind of track that, gun sales in the U.S. are at an all-time high, and obviously that can be a very polarizing, discussion. And I don't get into that kind of stuff.
I think it's just factual. I don't think there's anything polarizing about it if you're just hitting facts, right? So
yeah, I'm with you. Just some people can be. I find that the sensitivity these days with the advent of social media, everybody has an opinion these days about everything, and everybody's so sensitive with thin skin.
Well, you know what? I'm going to be honest with you. I just ordered an AR-15. I did it because it's fun. I'm from New York. I had 22s and had BB guns in New York. I come down to Florida. My son is 18 years old, and this is the responsible thing to do. He loves guns. So as a parent, I'm going to share in that journey with him. I'm going to teach him how to shoot it responsibly. I'm going to have a lot of freaking fun, right? That's as a parent, I could say, you know what? I don't want you to do it, but he's going to become an adult. So at least let me share in the journey. By the way, my wife is a better shooter than I am. She's freaking amazing, right? She's unbelievable.
My wife crack shot too. She loves going to the gun range. My college roommate has been a hunter, been a marksman. His whole life. We've been friends, for 30 years, and been really fortunate to be around, some really, really great people that understand, the safety, and they respect, what it means. And that's what's most important to me. Is it's one thing to have guns and talk about those things, but all the efficacy that goes around the safety, how to use it, understanding it's a tool, understanding, what those mechanisms are, I think is very important. And Texans and Floridians really understand that. And it's why we have a lot less shooting deaths. And that's kind of the ironic piece around it, that we have more guns than anybody, yet we have less violence, to where, walking through the streets of Texas, you're going to be a little more reluctant to pop off to a guy that you don't know, because chances are
because he's going to pop back.
Yeah, that makes a lot of sense. You said a couple of times you're a lawyer. Now, as the lawyer in you, what are the risks in Texas, or do you see any? I mean, other than me seeing really low cap rates, and I mean, if the economy completely crashes, because I've been looking through this whole COVID, and everyone's been criticizing Florida and Texas over our response to COVID. And I just say, point to the economy. We don't have a 24% unemployment. Our economy has been cranking down here in Florida. And the only reason why, Texas is even much better than Florida in that respect also.
Why it's the exodus, right? So if you look at the map, a million people left California last year, 150,000 plus came to Texas. New York has always been very friendly with Florida, right? So that East Coast exodus, out of the Connecticut's and the and the New Yorks. I mean, the local government, God bless Cuomo and the stuff that he's done up there. I have a lot of respect for him. But, the government, the state governments have done a horrific job for attracting employers. Same with California. So we're watching that California, Illinois exodus into Texas, and you're watching the East Coast migration, into Florida. Which is causing less damage that you're seeing in some of the other states, because the employers are here, right? You look at Austin just as an example, and obviously I speak from an Austin centric kind of vantage point. Although our second largest office is in Miami in South Florida, and our main counsel at Greenberg Traurig is there in Boca, so we spend a ton of time in Florida. This is where the jobs are. The employers are coming here. Facebook's second largest office in the world is here in Austin. Google's second largest office in the world. Apple bought the 140 acres of $1 billion development. Elon's, biggest gigafactory in the world is coming here. The small little company called Dell was headquartered here. Whole Foods, which was Amazon's largest acquisition to date at over $13 billion, was founded and headquartered here in Austin. I mean, in Oracle's second largest office is here. So when you have to track where the money's going. So the employers are saying, okay, even with this advent of working from home, do I really want to pay $6,000 a month in San Francisco as a employee and work in my little thing? I need fast internet. We have Google Fiber here, the fastest internet in the world. And I can have a little bit more living space. I can work from home. And that dollar amount that I'm being paid on a yearly basis goes a lot further because cost of living is so much cheaper here.
Mm-hmm. So what risks do you see? I mean, like I said, other than valuations.
Well, look, I see infrastructure risk, more than anything, and being able to support that growth. We have highways going up like crazy, and it kind of starts to feed that overpopulation. We have a housing crisis here in Austin where a lot of Austinites are being priced out of the markets. Over gentrification is something that I'm concerned about. The biggest knock, here is public transportation. We just don't do public transportation well, and it's something that needs to be addressed in a post-COVID environment. But it's been one of the big failures.
More Uber opportunities, right?
Say it again.
You said just more opportunities for Uber, right?
Yeah. And that's exactly right. And that's part of that evolution, because what COVID has done has accelerated the movement towards a lot of these evolutions. Not that they weren't going to happen, it just accelerated
big
them.
Time. Yeah.
Big time. And so I think that's the main point that a lot of folks miss is these aren't new things that are happening. They were already migrating that way. We just threw jet fuel behind
speeding it up. Yeah, for sure.
Yeah.
So, Ari, what other cities do you like in Texas? I mean, I love San Antonio. I mean, I love, Houston's another great market. What other markets do you like in Texas?
Golden Triangle, as we call it, right? So, I-35 is the main, thoroughfare, right? Connects Mexico at Laredo to San Antonio to Austin to Dallas, and then ends in Chicago. But the main ones, right? The main ones that you would already know, but Dallas is a sprawled metroplex. So I'm super bullish on that sprawled metroplex of, Dallas proper is one thing, but there's like Denton, Arlington, Garland, all these little Plano, Texas, Frisco, I'm more interested in the borderline tertiary markets that are surrounding the proper cities, where that spillover is, where the consumer can get a little bit higher value. Like Houston, we usually don't say the H word in my office. Houston is, is so connected to energy still that it can still have that boom and bust. But a lot of really smart folks like Tillman Fertitta and a lot of great, Houston natives have done great there. I don't understand the market as much, but outside of Houston, like Katy, Texas, the Woodlands, these little tertiary markets that are surrounding them is where I think the greatest opportunities are. So just kind of take the main cities that you would think off the top of your head and then kind of go out 30 miles, 20 miles within a radius. And I think that's where really the future is, and where the long-term risk-adjusted growth is going to be.
So let me ask you, Ari, when you go out that far in the tertiary markets and all that, is it priced accordingly? Is it cheaper? And do you see risk of if we ever do have a recession, of those people having to go into the city to drive? Will you lose those people, or is it just that growth that just continues to push out and you don't see that
growth continue to push out? And I think look, technically we're already started in the recession, right? If you look at recessions there. It's inevitable. And I don't see that as a bad thing. I mean, this is the greatest generational buying opportunity I've ever seen in my lifetime. And, this is what happens in a cyclical economy. We have to get used to it, depending on how these elections go. One way or another is where that kind of crash would be. But, I've been talking about this crash now for many years, and there's no question that it's going to happen. But whether or not it'll be a slow bleed, whether or not it'll just be, the tower crashing down in one instance, who knows? I don't have a crystal ball, but we have to plan for a major, major recession, if not a depression. Ray Dalio, who I have a tremendous amount of respect for, obviously in Bridgewater, they run the largest hedge fund in the world. He said that we cannot expect the public markets to produce more than a 2% annualized return over the next 10 years. Okay. So that means pension funds are going to need ways to hit their actuarial returns of 6.5 to 7.5%, which is going to cause a lot of problems. Kind of in that area, but the private markets are still so dislocated, and the public markets are priced to perfection, where we're going to have to start looking to the private markets to find those areas. But the short answer is yes, the tertiary markets are priced accordingly, from a risk standpoint. Fannie Mae and Freddie Mac have done a tremendous job of providing accretive financing for these types of properties, certainly in the multifamily sector. The last Fannie loan that I had quoted was at 2.6% with several years of IO for 12 years. So, I mean, that's effectively free money. So when you can find something that is a little bit higher cap rate, and you have that type of fixed debt, you can put a supplemental on 3 or 4 years in once you've completed the value add. I mean, if you can't find opportunity in that, I don't know where you were. If you look under Jimmy Carter, rates were hitting 17, 18%. Guys were still making a ton of money. So I've never been more bullish on the ability to create generational wealth within this multifamily sector.
So I agree 100% with everything you're saying. My struggle that I'm having right now is there's so much money out there right now. There's not that much deal flow, and money needs to find these returns. So the brokers aren't pricing these assets accordingly. Is it going to take time? Is it just going to take time to weed out? Because I know the operations, sooner or later, those operators that aren't operating properly are going to have trouble. But there's so many people chasing after deals. We're looking at a deal in Greenville. It doesn't make any sense to me. It's a 1970s CapEx tsunami where they're overpaying to begin with. They need to put 10 to 15 a door in it. And I'm like, this does not make any sense to me.
They had 90 offers that ask.
And, and like we're it's in the mid 70s and the broker's like, yeah, I agree with your valuation. But so, I mean, when do you see that like starting to wane a little bit? Because it's actually frustrating.
It's not going to, because multifamily and industrial are going to be seen as a flight to security. So other asset classes, the hospitality, the retail, just to kind of pick on them a little bit, there's a certain amount of capital that needs to go out, right? So when you put the lawyer hat on, when you look at the fund structures and you look at the mandates where the capital needs to go, we still have $300 billion of private equity money sitting on the sidelines that could be called to purchase these assets, right? So multifamily and industrial are going to be seen as flight to security. Obviously, the financing mechanisms in place for multifamily are much more accretive and much more easily accessible, certainly from a non-recourse standpoint. But I don't think you're going to see the dislocation in multifamily that everybody's expecting, because it's a flight to security. So in fact, I think it's going to go the other way. Cap rates are going to actually compress a little bit, if anything, not expand, because people know that that's a safe place to be. Millennials don't buy, they rent, and all the other reasons that kind of go into what make that asset class resilient is going to keep cap rates stable, if not compress them. So that bloodbath that people are looking for in that sector, look, it's I hate making absolutes, but I am very weary that that's going to happen. In fact, we're underwriting that it's just not going to happen. That
I like that. So how are you underwriting? Because it's a weird thing. I mean, cap rates in a lot of these cities are 4 and 5s in these older properties.
Longer timeline. So we're underwriting. So we'd look at deals on 3-year performas, 5 years, 7-year, 10 years, and I've just pushed the performa out. Like basically we've said, let's stress test this thing. The lease up takes a little bit longer. CapEx will be a little bit more expensive, but what does the IRR look like on the 10 years? So we're buying a lot of this stuff in the opportunity zone, which I don't do things just for taxes at all. So don't misconstrue what I'm saying, but everything's become much more patient capital. And our LPs understand that, where if we can walk in and pay out a 4 to 5% kind of distribution, for our institutional investors, that's real money because bonds are paying nothing. So we're looking at things on an initial cash flow basis, although a 4 or a 5 doesn't sound very sexy, but to them it is. And then pushing out those timelines and being more patient, with what that capital is for us the best way to look at it.
Before we go to the short answers, what other sectors are you bullish on? I know Jake and I've been saying office is going to die. I've been saying that for years. I've been saying retail is just, I don't know what the heck is going on.
I got to disagree with you. I got to disagree with you there. I think that the best analogy there is, I'll give you 2 pieces of background, and me being the English major, I'm a research data psycho. I mean, everything that we do is backed by technology and by data. And if you look back into the 1970s, 80s, going into the late 90s, the largest tenant of offices was law firms. Okay. And the reason why is because they needed a place to house their libraries. So in New York, as an example, you had law firms taking 5, 6, 7, 8 floors. And then when it digitized, that same law firm only needed, 10% of the space. Okay. So can y'all see me? Sorry, that clicked out. Yep. So law firms being that thing, we went through this correction. Okay. And then it took 4 or 5 years for other businesses to start. But what people aren't underwriting enough is that there's more startups and more entrepreneurs in this era than there's ever been. And this type of calamity breeds innovation. We learned that from World War II. So once you have necessity, for innovation is going to thrive. And we now know that open space workplaces just don't work. And, people working from home, we're starting to see on the short term, it works as a Band-Aid, but productivity levels are starting to drop in a very meaningful way. So same as retail, we called it the retail apocalypse. Retail is not going anywhere. It was overcorrected. So they looked at it, and we made a ton of money buying discount retail anchored by Target, TJ Maxx, Family Dollar. That was a big part of our portfolio. We sold it all several years ago, but it's going to be a very similar cadence. So when Amazon, the largest online retailer in the world, their biggest acquisition in history is a brick and mortar location like Whole Foods, that has to tell you something, right? That has to tell you that
I think it's going to be based on needs and service, driven retail.
Experiential retail. It's going to be experiential
right.
based.
Yeah.
No one wants to buy an Hermes bag, online. They want to go in, they want to feel it, they want to touch it. And same with restaurants, et cetera. And offices are going to go through a similar dislocation. We've seen this happen before. This is not new, what people are saying about office. It's going to be reinvented. Cap rates are going to expand. Vacancies are going to come, et cetera. But you're going to start watching those vacancies in office convert into multifamily, like when the big boxes started to blow out in retail, folks like us started converting the big box into self-storage. So it's going to be a repurposing of those assets, but the overcorrection of office dying, I think is absolutely incorrect. I think it's going to taper down too much, and then you're going to watch it flourish back up a little bit. But yes, I do agree it's going to be less use, than we had seen historically because of COVID, but by no means is it dying. It's just being reinvented.
Sounds good. All right, guys, let's take a quick time out to hear from our sponsor.
Are you looking for ways to improve your life?
Here at Jake and Gino, our mission is to empower students through financial education and the vehicle of multifamily investing.
Yes, Jake. We agree that a person with financial intelligence can change the world for the better.
We've created our proprietary 3-step framework, buy right, manage right, and finance right, that we teach to our community. This framework, along with education, our one-on-one mentorship, on-site boot camps, and the amazing community, has propelled our students to massive success.
We've all been there. We've had so many students that have been able to shift their mindset, overcome limiting beliefs, and set a clear path to achieve their goals. Whether you're currently fixing and flipping, wholesaling, or buying single-family rentals, and you know that multifamily investing is the right vehicle for you, I encourage you to visit jakeandgino.com/apply to schedule your complimentary consultation with our team. And I want to let you know this isn't a high-pressure sales call. It's really just a discovery call to get to know each other better and see if we're a good fit for working together. And if for any reason we're not a good fit, our team has tons of resources we will share with you to help you along your journey.
If you're ready to stop spinning your wheels, go to jakeandgino.com/apply and schedule your call now. All right, we are back. Ari, what is your best habit for success?
Best habit for success is treating myself as my best investment, right? So the more I focus on personal development, the more I focus on my health and wellness. And a quick Google search on me, you could see GQ did a big cover, on my health regimen back in August. And I'm a crazy person about age management, about health, about exercise, about transcendental meditation, and the habit of continuously working on yourself, I believe leads to the most success, because the more that I work on myself, the more weight I can shelter, the more I have, sharpness of mind, clarity of mind, make better decisions, and putting that full responsibility on myself, not only as a leader, as a father, as a husband, but focusing on me. And, the old thing you always hear on airplanes is put the oxygen mask over your face before you put it on the kid sitting next to you. And I'm very true to that creed, is making that personal development a habit. And that goes along to the goal setting, that goes into, taking care of the mental health. My book is actually coming out, in about 5 months, that we'll share with you when we, kind of do the tour. And it talks about, these different 3 pillars of ourselves that we need to focus on, so you could effectively build yourself into an empire, and that's where I think you have the most responsibility. You take the most responsibility, and it's what you have the most control over.
So let's dive into this a little bit. Best age management tip then.
Best age management tip is actually, look, it's about what you eat, brother. It's abs aren't made in the gym, abs are made in the kitchen. And wherever you look at, from the veganist or the paleo or the keto or the vegetarian, there's all these different modalities, the Mediterranean. What we do know is we need to eat more leafy green vegetables. We need to have more vegetables in our diet that are non-starchy, and make that the bulk of our plate. Some would argue it should be the whole plate, but everybody kind of agrees that at least 75 to 80% should be leafy green vegetables. And I think everybody needs to be eating more vegetables, drinking high quality water, and moving your body every day, whatever that means, because if you don't move it, you're going to fucking lose it. And it's the basics. It's always the fundamentals, right? So being from Texas, as a Mavericks fan, as a lifetime Mavericks fan, and one of my best friends in the world is Kristaps Porzingis, who plays for the Mavericks, who's also an investor of ours, and, one of my best friends. And, what we talk about too is fundamentals. Fundamentals win championships. And the fundamentals of age management are moving your body, what you put in your body, right? And then how you take care of your mental health, whether through its meditation, affirmations, goal setting. And if you have those 3 things in line, you start to affect the 80-20 rule, where you're getting, 80% of the benefit with, kind of 20% of the work.
Jake, it's real easy for a lot of people out there. Just stop eating sugar. That's the first step. If you can cut out the sugar out of your diet, that's one of the biggest things. I mean, stop drinking soda.
Sugar is, because people don't realize that a slice of bread has the same glycemic index as a chocolate chip cookie.
Yes.
So wheat bread if you're eating a sandwich, it's one chocolate chip cookie on top of another chocolate chip cookie with turkey and lettuce in the middle.
Yep. Mm-hmm.
And so finding the places sugar actually exists, white potatoes, all
it's
sugar.
Everywhere. I mean, organic. Everyone thinks they're eating healthy. They're eating organic. Read the label. You have dextrose, maltodextrin, you have glucose, you have fructose.
First of all, if it has a label, don't fucking eat it.
Well, I'm trying to be practical. I mean, for the average person out there, if they can't do it, if they've got 6 kids like me, I mean, hey, I'm blessed. My wife stays home, can cook 3 meals a day. Not everybody has that ability, but at least if you're going to buy something, read the label and stay away from as much sugar as possible, whether it's processed.
Eat whole foods, eat real food, eat real food, whatever that means. And sugar, I think that's an unbelievably good mentality, because sugar is the killer. Back in the 90s, they said salt, that's bullshit. You
Oh, I
know,
love salt. I can't live without salt. My mom used to torture me and pull it when I was a kid.
cutting out sugar is the entire game. I couldn't agree with you more. But knowing where sugar, even certain fruits like bananas and cherries are super high in sugar, and making sure you're eating low sugar fruits such as berries, raspberries, blueberries, etc. But yeah, if you can control sugar, that's a big one. And we very much live in an alcoholic culture. I drink very, very moderately, if ever. And, alcohol is all sugar. I mean, it's just the whole thing is sugar. So I think that's an excellent, excellent takeaway.
See, Gino, I think that we found the real passion here. He's going to ditch the real estate and start something with TB12 here next. I think that's where it's going.
Yeah.
So.
Well, that's actually a funny point that you say that. I'm a big believer in what Alex Guerrero's doing, and I've been talking a lot with Ben Rowitz, who's Tom Brady's manager, and that's very much going to be something that we're highly passionate about. We have a full-time wellness director that's trained in Z Health, which is the forefront of neuroscience and physical exercise. I've been doing combat brain training now for 10 years. But yes, fitness, exercise, brain training, productivity is absolutely one of my passions. We're working on what we're calling the Rastegar method, which will be the confluence of all these things. But it's how we've been able to be as productive as we have, grown as quick as we have, and been able to enjoy a great, fulfilling, and happy life in the process.
What about a tip for someone starting to scale their business? You started with a 24 or 23 unit. We started with a 25 unit. I think some people are are poo-pooing it if they're, fans of the game, if you will. They're following real estate. They want to get into multifamily. I'm going to get in and get 300 units on my first one. I think that's great. But early on, what's a tip for someone starting to scale their business?
No, you need to partner. You need to find a great, what I always tell folks, you want to be in this business, go find one of the best operators you can find, someone like yourself, someone that's local to the area that you live in, that you can see, and, save some capital, be an investor first, and, and be in the details, read the quarterly reports, ask questions. And you might be that annoying investor, that's asking 1,000 questions, but you're asking from a place of genuinely wanting to learn, and start that way, and just do several deals where you're just kind of sitting in that passenger seat, going along for the ride, asking the questions, so you mitigate the risk. So by the time you've made some money in those deals, hopefully, when you go into it, you've already, kind of staved off some of the rookie mistakes that you would have made. So I'm all for, doing, partnerships before you do anything. And it's exactly what we did. And I thought it was a great way to mitigate risk, because at the end of the day, there's a fine line between being a gambler and being an investor. And all that comes down to risk management.
Book recommendation for the audience.
Book recommendation. There's so many. The One Thing by Gary Keller.
Why do you like that one?
Well, Gary is obviously started Keller Williams, an Austin guy. I think it's one of the most.
A lot of Austin pride from Ari, man. Loving the Austin, huh?
I'm an Austin boy, and I'm a Texas boy. We're probably the only state that'll tattoo the shape of our state on our bodies. So,
or get it branded on the ass, right?
And the One Thing is something that I've talked a lot about, is that this work-life balance thing is total nonsense. You have to seesaw between being hyper-focused at work and then go home and be hyper-focused when you're at home. And it's a seesaw between being unbelievably focused. I've said this for many years, that multitasking is nonsense. All it does is dilute, your efforts on 10 things instead of being great at one. And what this book really does is help you understand the science behind that, giving practical tips, to help you really learn how to focus and dial in on whatever it is that you're doing, with great examples. It's an easy read, doesn't have too much jargon in it, it's larger text, great pictures, but just an unbelievably great great book for anybody looking to be successful in any endeavor.
Nice. What project are you excited about right now?
I'm excited about a lot of them. I'm really excited about 1899 McKinney Avenue, which we're building the largest living wall ever built in North America, with over 40,000 plants. It's the one I mentioned earlier that's on McKinney Avenue in Dallas. There's been hundreds of articles written about it. If you just type in Rastegar Property Company, McKinney Avenue, or anything that, there's literally hundreds of articles. It's been covered in Forbes several times. It's just a post-COVID development that we love. And, we have an office building we're building here in Austin as well, that everything we're thinking post-COVID. How do we build larger elevators? How do we use, copper instead of metal that has an inherent, kind of antimicrobial effect to it? How do we use UV lighting? How do we use, special UV HEPA filters to clean the air? And it's just been a really fun way to understand where the world is going and using design to build a safer environment for our tenants. And it's been a great learning experience, and something that we're super passionate about that same health and wellness core value that's inherent to Rastegar, of having our own, wellness director, and bringing health and wellness and brain training and exercise to our employees, to our tenants, doing, weekly things that we do at our apartment complex for our tenants. But it's something that's very much important to us as a firm, understanding what this post-COVID life is going to be.
So if folks want to learn more about the company and whatnot, what's the best way to get a hold of you or some representative from the firm?
Yeah, you can go to the website, right? It's, you can go to rastegarproperty.com, or just type Rastegar into Google, or Ari Rastegar. There's literally hundreds and hundreds of articles, written about the stuff. I write for Forbes as a contributing author, in addition to a bunch of other publications. But, it seems like we're in the news here in Austin just about every day. We had a new press release come out today, actually, about another piece of land that we bought, putting together a land assemblage on South Congress. But we bought, 5 different multifamily projects right at the height of COVID, partnering with institutions to do that. And yeah, it's pretty easy to figure out what we do. It's been very, very public. And my podcast actually is launching in about 30 days. And, I'd love for you all to come be guests on our podcast, when it launches, as well. But just start to produce more content and, share more of the things that we've learned along the ways, mostly the mistakes, and, kind of continue doing that.
So Gino, you got plant walls, you got anti-sugar and multifamily. This is right up your alley here, no?
So, Mr. Stenziano, I'm going to wrap this thing up and try to give the whole recap of this. When I heard Ari Rastegar, I thought he was going to bring a battle axe to this day. His last name is just one of the best last names I've heard. I love it.
You got Ari Gold and the Viking all in one, right?
That's what I'm saying, bro.
The Vikings, you nailed it. And I'm a big Jeremy Piven fan and a big Ari Gold fan. So that strikes a chord with me.
I love that. So it's around 2003. Ari thinks his dad's a jackass. And then, 5-7 years later, he's like, holy crap, my dad really, really learned a lot in the last 7 years. What happened here, right? 2006, he becomes a lawyer. He's like, for 15 minutes, I'm out of here, bro. I ain't doing this crap. Gets $3,000, scraps it up, puts stuff together, goes to New York City. He's probably there for a few years, and he sees Uber, he sees Airbnb. He passes them by because, like everyone else passing them by too. So he leaves New York. Thankfully, leaves it, goes back to Austin, buys a couple of guns, starts his company, and the rest is history. There's a lot of work involved that we miss between 2010, 2011 and on. He's gotten into so many different businesses, so many different ventures. I can put up the honeybee right here, everybody. He's the king of multifaceted multifamily, because he's multifaceting so many different businesses. Now he's going to start leveraging his brand. So the sky's the limit. We resonated with him on so many different levels, because it really is all about your mental state. It really is all working on yourself.
We can get into core values. He started hitting on core values there for a minute, like to hear more about that at some point. But yeah.
And it really is about working on yourself and really putting yourself in a good situation and learning ultimately all the problems that you have in life and all your failures. They really make you the person that you are. And, as you said, Mike Tyson likes to say, you get punched in the face, your plan goes away. But Ari's gotten punched in the face enough times that it's like, okay, as Jake likes to say, it's just another one of those, right? So that's what life's all about.
I think that was Ray Dalio and I stole that, but that's fine.
It's okay, bro. I give you all the credit. I like it. So, and listen, as you just said, Ray Dalio, really your ego, check your ego at the door. It's not about who's right and about who's wrong. It's about how can we solve the problem. I think that's what leaders come down to. I don't care if Jake is right or I'm right. How do we close this deal? How do we, raise the capital? How do we move forward? That's what we're all striving for. And that's what all the good leaders are striving for. So I just want to, thank Ari for being on the show. And it was Great hour worth of content. Everybody go back and listen to it because there's a lot of gold nuggets in this show.
Thank you so much.
Ari.
I really appreciate it, and look forward to, if y'all ever come down to Austin, please be my guest. And as you know, I'm very much an advocate for my city, and a lot of people extend those invites. When I say it, I mean it. So call me out on it. Come down here, and we'll roll out the red carpet for you.
Sounds great. Thanks, Ari.
Thanks,
Take care.
Ari.